All right, welcome back to Metropole Television. My name is Simbalaja Charles Kiage. This is Business. Let's tackle some of the biggest headlines that you're waking up to this morning now. The National Aviation Management Bill has to wait longer because it lacks the input of the public and technical stakeholders in accordance to the Kenyan Constitution. Now, the bill, which was to see the nationalization of the airline, now faces further delay in nationalizing the loss-making Kenya Airways. Its first half-year losses for the airline hit 14.36 billion on months of suspended air travel due to COVID-19. National Assembly Speaker Justin Muturi said that the public hearings on the bill must take at least 3 days, arguing that, and I quote, all Kenyans must be satisfied with the process to nationalize KQ. Now, Kenya seeks to adopt a model similar to countries like Tanzania and Rwanda that are already investing huge amounts in their national carriers, a factor seen as a potential threat to the Kenya Airways market share in the region. Joining us this morning, therefore, to help us make sense of this headline, we do have George Manga, who is the managing partner, AMG Kenya. George, good morning. Happy to have you around. Now, where do the chances, let's even close our eyes to that delay, but where do the chances of KQ lie in a space that looks quite competitive?
I think, Elijah, and sorry, I must make apologies. I'm having a small cold, so my voice will not be very clear. If that happens, don't mind my voice. Going back to the question, KQ. Let me just give you a background of KQ. Remember, KQ took over from East African Airways. That is in 1977. And East African Airways was a company that was owned by 3 East African countries, that is the Kenya, Uganda, and Tanzania. And that time, it was a government, a public institution or a public sector institution. When it was taken over in 1977, it did quite well between 77 and the 80s, and then it started reporting serious losses in the 90s. In fact, in 1992, Kenya Airways then was technically bankrupt, and they had to look for strategic investors or private investors to come and prop it up. That is when the likes of KLM came on board, the likes of now KQ Group came on board now to take a bit of shares. Though still government held quite a number of shares in the airline. Fast forward, Kenya Airways, I think, did a bit slightly well in the early 2000s, but again it went back into loss making just shortly thereafter. In fact, in the last 3 years, KQ has posted very heavy losses. Remember, in 2017, they posted a 10.2 billion loss. In 2017, 10.2 billion loss. 2018, they did 7.5 billion loss. And then last year, they did 14.36 billion loss. My issue is, if KQ was to be nationalized again, remember, this is where they came from. So they're just going back to where they came from. If they were to be nationalized again, are we saying that the Kenyan taxpayer is going to take up this heavy bill of their loss-making straight? 14.36 billion is not small money, Elijah. And if the taxpayers have to pay this money, then we must have a clear path on how this company is going to return into profitability. But that notwithstanding, remember, an airline is a flagship, what we call a flagship project in any country, and it supports so many other industries around it. Remember, tourism is a very big industry in Kenya, and our airline supports tourism industry. Remember, horticulture is a big industry in Kenya, and our airline supports that. So in my thinking, I think the government or the technocrats at Treasury should look at it as a company that other industries ride on, not necessarily a profit-making company. And the other thing would be how to manage it efficiently, so that even if it is making losses, but not losses to the tune of 14.36 billion, 7.5 billion. In fact, if you look at the space around our corporate world in Kenya, there are very few companies that are posting those heavy losses. In fact, we have companies that post profits to that tune, the likes of Equity, the likes of Cooperative Bank, the likes of Safaricom. But KQ is posting the losses to the tune of 14.36. So I think the government must crack this very carefully, so that this burden is not transferred from the private owners back to the Kenyan taxpayers. And then something else that I think Muturi has mentioned that I must say is a positive to it. Remember, the taxpayer is going to take up this bill, and therefore there must be maximum participation from the public so that they know what they are going into. If the government is going to resuscitate KQ, then I think they're going to pump in something to the tune of 20 to 30 billion. That is when it can come back to life, and that is not small money if you look at our budget figures in 2021, Elijah.
All right, Joe, just before we move on to the next issue this morning, I mean, yes, we have to be cognizant of the fact that the renationalization drive for KQ actually did happen before COVID-19. Now, these numbers that we're talking about here, you would just hoped that they would have been looking a bit better, more than the 14.36B that we're talking about this morning. So, I mean, when you look at that, Joe, does it throw another spanner in the renationalization drive? Now, we do know exactly how the debt forgiving and also the debt spread is going to be done. We do know it's going into government securities and all that. But does it sort of throw a spanner? Because yes, they were making losses before this, but now these losses continue going on. At the same time, the renationalization drive is not yet done. We have delays on it as well. So is somebody looking at it and saying, maybe this throws another spanner in our drive?
I think, Elijah, nationalization is the only option that KQ has. If you are to bring in a private equity investor into KQ today, the transaction would be lopsided to the disadvantage of KQ. Remember, if you are propping up a loss-making company to any investor out there, then the risk profile is quite high. Therefore, what they'll be requesting for will be something to their advantage. So KQ is already in what we call in a catch-22, or between a rock and hard place. And I think nationalization is the only option that they have. COVID-19 came at a very bad time for KQ. Remember, they had just posted 10.2 billion loss in 2017, 7.5 billion loss in 2018, and then 2019 14.36 billion. So I foresee 2020 they're going to even post heavier losses than what they did in 2019. So I think the direction that the government is taking is the right direction. The only question that they need to ask themselves is, how do you turn around this situation so that even if KQ will be posting losses, then they don't post losses to the tune of 10 billion and above. And I've looked at that bill slightly, and I think what they're proposing is that Kenya Airways now will be merged with KAA so that it operates as one, as more or less as one entity, so that the business of Kenya Airways will not only be in airline business, but they'll also be managing the airports. I think those are the areas that they must start looking at, so that they can prop up the numbers for KQ. Nationalization is not the first step towards breathing life into Kenya Airways. I think the government or Treasury must do more to bring this company back to life. What I agree with in the bill is that a national carrier should not be allowed to go down. And we've seen this with other airlines. Like, for example, if you look at South African Airways, also had the same problems initially. Remember, last year they posted also very heavy losses, and I think that they are also trying to go through to think through nationalizing that airline. You look at ET, that is Ethiopian Airline. They were making losses in the in 2010, 2011, but what they did is that this company was nationalized, and they're doing more than just air transport business. They're doing hotel business. They're doing several other things that prop up their numbers. So I think that is the thinking that Treasury had to be able to come up with this bill. But I think this is a bill that we must get maximum participation from our legislators and even from the public before before we pen it to paper and it becomes operational, Elijah.
Fantastic. Let's therefore move on to the next issue this morning, where entrepreneurs in the local micro, small and medium enterprise sector are set to enjoy a raft of preferential benefits from the Kenya Bureau of Standards, KEBS, following the passing of a policy that is geared towards supporting their growth. Among the benefits MSMEs will now enjoy include graduated courses for all services offered by the national standard body, access to affordable financing options and training on the use of intellectual property. KEBS will also be involved in the standardization of innovations by the MSMEs, technical advisory services for quality assurance services, product testing and equipment calibration, training and inspection services. Now, concerning access to markets, MSMEs will be provided with product certification and system certification services to facilitate better market access of the products and market surveillance. Now, KEBS board chairman, engineer Bernard Ngore, says these changes will help level the playing field between startups and upcoming entrepreneurs with other established corporates. Engineer Ngore added that in line with the Big Four agenda that is focused on improving the sector, KEBS will provide a framework for enhancing the sector in terms of preferred service provision, prioritization, collaboration, and suitable and sustainable financial arrangements. The MSME sector contributes approximately 40% to the country's gross domestic product, but continues to perform below optimum due to a myriad of challenges. Joining us this morning, therefore, to understand this new drive by KEBS, we're joined by John Kabwe, is the KEBS head of quality assurance. Mr. Kabwe, pleasure to have you around.
Pleasure to have you. Thank you.
Fantastic. Let's get the thinking behind this new drive by KEBS.
Thank you very much, Elijah, for giving me this opportunity and providing Kenya Bureau of Standards with a chance to communicate to the entire Kenyan population of what we are doing. Just to bring to light is, one thing is Kenya Bureau of Standards was established way back in 1974 under the Standards Act, Cap 496 of the laws of Kenya. And the mandate that was given to KEBS is, can be summarized into two. That is standardization, and the other one is conformity assessment. And what Kenya Bureau of Standards have been doing over the years is to ensure that the industry, the local industry, grows and access the available market locally and even internationally through the process of standardization. Because you can remember, you cannot take a product to the market or even a service to the market if that service does not meet the requirement, either by the consumer or the standards required by law. So basically, that is what is called standardization, whereby we provide a platform through development standards. And these are just minimum requirements that if you want to place that commodity to the market, is going to comply with. And you realize here, Elijah, is that the issue of standardization covers whether you are an SME or a large enterprise manufacturer, for your product to access and to be acceptable the population outside there, or to be of benefit to them. It must be standard. It must be quality. It must meet the purpose why they buy. If you go outside there and you buy a wheelbarrow, what you want that wheelbarrow to do, whether it's produced by a corporate big company or an SME, is that it should support or carry the load that you're going to place on it. And also it's going to be efficient as you work on it. So basically that's what standardization is, provide that platform that either the big or the small companies must comply to it. And how have we done that? Is that this has been done through the issue of technical committees. Technical committees that have been provided outside there that exist, and the membership to these technical committees that writes or develops standards is open to everybody. And right now we are allowing even micro and small enterprise owners to be members of the standard technical committee. The reason why they are allowed to come in to sit in the technical committee is to provide expertise, because what we have realized is that even SMEs, the so-called even Juakalis outside there, they have some technical competencies that if they bring into the technical committees, then the standards that are going to be formulated will take care of both the practices that they do, and also incorporate the practices that they do. So basically, one of the things that Kenya Bureau has done is to open the membership of the technical committees. This allows SMEs, this allows everybody with the technical expertise to be a member and to contribute in coming up with requirements. And these are the requirements that now when you do the manufacturing, you must comply with. That is one of the things that we are doing. And in focus, just to come to focus to what you have talked about today, that the chairman of the National Standards Body, Engineer Ngore, talked about. He talked about preferential benefits to the SMEs. And what are we doing at Kenya Bureau of Standards? One is the issue of the costing of our services. The certification services are expensive in order for you to meet the certification services. But what Kenya Bureau of Standards has done is to provide certification services at a very subsidized rate. Like, for example, if you want to take your product and to have it certified by the Kenya Bureau of Standards, in terms of payment, like we give you an opportunity, if you have 3 products, we'll charge you a price of 5,000 shillings per year. You realize that is very substantial because that we have waived the inspection fees, which is very costly. We have waived the testing fees, and we have also subsidized even the certification fee. So that is one of the things that we are saying as Kenya Bureau. When we do that, then every SME will be able to approach Kenya Bureau of Standards and will be able to access the certification services. What are some of the other subsidies that we are doing? Providing trainings, and the trainings that we are providing to SMEs, like if they are in the food sector, we are providing trainings in food hygiene practices or food manufacturing practices. In terms of other processes, we are providing them information about quality management. How do you manage quality in terms of raw materials, in terms of monitoring of what is coming in, because you must start with quality products for you to get the products that are quality. Then what we are doing right now is that we are providing services, training services at a very substantial rate, and these are geared to us SMEs, whereby either we'll call them and organize virtual meetings for them to understand about quality and standards, or where possible, that is even before COVID, and as we are also looking forward that this situation will be coming to an end, is we provide a workshop, an opportunity they can come even to see our laboratories, to see how testing is done, and to see how issue of standards, how they can get standards, and how they can even put systems that monitors and even document. Because what you realize in Kenya is that documentation is very, very critical in order for you to demonstrate that you're meeting requirements. So we are also training these people on how do you document your system in terms of standard manufacturing practices, in terms of monitoring, what do you monitor, what do you check, how do you record that in order for you to demonstrate, because that is what you can be using or you can use to take your product to the
Yes, Mr. Kabwe, if I may jump in this morning, Mr. Kabwe, yes, we exactly get the drive that is coming from your end as well. I just want to ask you on one specific area that has been a bigger challenge to the smaller businesses in the country, that you're going to be involved in providing support under product certification and system certification services to facilitate better market access of the products and market surveillance. Has this not been there before, and what is going to happen here differently? Because this has been the biggest challenge for SMEs in Kenya.
Thank you, Elijah. I totally agree with you. There are several challenges that SMEs have been facing in order for them to come or to have certification process. And some people outside there will say that some people have said that finances is a big gap. But to me, I want to say no, finances is not the big gap or challenge that the SMEs are facing. Because if you're with a good idea, you can get financials outside there. There are people that are willing to finance SMEs. We have projects that are initiated by the government or collaboration with the government that can help in terms of financing. But I think the biggest gap that we're having is one, information gap. What do I mean by talking of information gap is gap understanding about the existing Kenya standards and the requirements. So that is a big gap that has been there, especially in the SMEs. And one of the area that Kenya Bureau is going to address going forward is to make sure that this gap is reduced. How do we reduce the gap? This is through training, offering training services and advisory.
All right, Mr. Kabwe,
The department at the Kenya Bureau. This National Quality Institute is going outside there, developing training protocols that can go to SMEs to provide them with information that they require. Another maybe gap that I can talk about is the gap of capacity in terms of, do you understand what is quality and how do you monitor quality? How do you record observation or the testing that you do? That is also another gap that we have realized. And this is going to be addressed through coaching. We are having right now what we are calling SME mentorship. And this is SME incubation, sorry. What we talk about incubation is where we partner with other institutions like the Kenya Industry Institute, KIRDI. We partner with the KIE, Kenya Industry Estate. And this is what we are doing, is to partner with them so that we can provide an opportunity that we can train and facilitate and access, inspect their premises without having any difficulties.
Yes.
Thank you.
Mr. Kabwe, thank you very much for taking your time to speak to us this morning. There's a lot that I would love for us to go on this area, but guess what? We're going to take some little time and address this topic on its own. Thank you very much for taking your time to talk to us this morning.
Thank you.
All right, now let's move on to the next issue, where the price of tea has improved by 30% in the last 2 trading months at the Mombasa auction. Now, according to the Kenya Tea Development Agency, KTDA, the average price per kilo of tea for KTDA managed factories rose to 270 shillings between 1st July and 1st September 2020 from 202 shillings. Now, the lows of 200 shillings per kilogram were last seen in 2007, caused by the global economic downturn that most of the tea importing countries faced. KTDA Sales and Marketing General Manager John Bett has attributed the increase in tea prices at the auction to higher demand than supply and low tea production, especially in India, Assam region, where the effects of COVID-19 pandemic and the rampant floods have devastated tea operations. In the months of July and August, KTDA managed tea factories produced 17 million kilograms, a 34% reduction in quantities from 27 million kilograms of made tea produced in June. Now, besides, data from the Tea Directorate indicates that the tea production for July declined significantly to 35.55 million kilograms from 46.37 million kilograms in June and 47 million kilograms recorded in May. So the question this morning, it would appear that the COVID-19 pandemic has not affected tea earnings, especially at a time when other sectors are hurting from the pandemic. What is your take on that? And to respond to that question this morning, we are joined by Apollo Kiari, is the CEO, Kenya Tea Growers. Good morning, Mr. Kiari. How are you doing?
Good morning, Rija. I'm well, and you?
Fantastic. Should we be celebrating this headline this morning?
Well, I think thank you for hosting me here this morning, and I want to just demystify this particular issue in terms of the fact that it's being said that COVID did not affect the tea industry. On the contrary, the tea industry has been undergoing one of the worst periods in its life over the last 6 years. COVID came in March, and but then the industry did not get spared from the effects of COVID-19. What happened when COVID came is that most of those countries like Afghanistan, Pakistan, Yemen, Iran, UK, Germany, and Russia. So what happened is that there were disruptions in terms of shipments. There were shutdowns in terms of restaurants and cafes. So consumption drastically went down. And not to forget that at the beginning of the year, and even as late as last year, we had a very favorable weather condition. So what happened is our tea production went up tremendously. And we had our warehouses bulging with teas. So what happened is that there was too much tea to offer to the market. And what happens, basic economics is that when when production is high and demand is low, prices go down. So we had the price going down at almost $1.7 per kilo of made tea. And don't forget that at the same time, costs of production did not stop. So because of the shutdown and the lockdowns and the fact that there was very little movement, we continued to sustain the operations against a backdrop of low consumption. So our cost of production continued to go high. And also, not forgetting that Kenyans, we don't take a lot of tea. We consume very little tea as compared to other countries, yet we are one of the largest producers of tea. So we got into a situation whereby we could not offer our teas competitively, and the month of April, May, June were very bad for us. It's only now that in July, August, when the situation is changing, simply because of the cyclic nature of the trade, of the business. And also, Kenya is very lucky to have good weather all year round, as opposed to other competitors like India, Sri Lanka, who have very erratic kind of weathers. So they have periods of high production, times of low production, and what is happening right now because of the shutdown that those countries experienced during when a lot of COVID came, they went into total shutdown of their estates, something that never happened in Kenya. So what is happening is that out of that 2 months of their shutdown, they don't have crop, they don't have products to offer to the market. So buyers have shifted to Kenya, and that's why you see the prices shooting up.
Fantastic, Mr. Henry. I would ask you, we take a little tiny break. Once we come back, though, the question for you is going to be, before COVID-19, we had a situation in the market where we were talking about an oversupply of tea in the global market. So the question is going to be, has this situation corrected? And how can Kenya use this chance to actually stamp its footprint in the global market? Once we come back, give us a 2-minute break. Once we come back, we still have George Munga, who's going to talk about how manufacturers are saying do not increase taxes, especially for beer products or alcoholic products, this morning, because that is also going to hurt the tax collections in the economy once we come back.